Hello, this is Joe Pryor, the virtual real estate team in Oklahoma, where we specialize in new residential construction for investors in the Oklahoma City and the Tulsa markets. It is, let me look at my watch, the 17th, and I have a special message for you. Now, there's a war that's going on, as you all know. It doesn't like it's going to end soon, and what we've seen is oil prices go from roughly around $65 to $70 a barrel to last Friday at $97 a barrel, going up now. We expect it to pass $100 a barrel. We know that it's been as high as $119 a barrel. Seems like the new normal. So for Oklahoma, which is an energy producing state, both oil and natural gas, that is exported, it's fantastic for us because basically we're going to get more tax money on these higher prices because the oil companies in their drilling, they pay taxes. Every time a rig goes up, there's 12 new people that are employed as service people. Now, drillers we don't necessarily care about because they're nomads. They're in their RVs going anywhere and everywhere, state to state. But all of these folks still spend money, and that's sales tax. So for Oklahoma, the surpluses that are coming in, especially this is going to be over the 12 to 24 months. This is kind of an impact it has is really important. So I want you to be aware of that. And if you're a state that's an importer of oil, this can really cause a little mini recession. So if you're an investor, you really need to think about this, about where you're putting your money, because this is kind of changing the market. Now, the second thing is changing is inflation, because energy is used, as you know, in everything, in food production, in making things for homes, in terms of wood or steel or sheetrock, etc. And so that's going to be passed on and making houses more expensive. Also, you got to deliver materials, and they're in trucks, and you got to deliver labor, and that's in trucks. That's going to be passed on in higher costs. So right now we have what I call, excuse the reference, but pre-war pricing. And not only that, we've got discounts. So for instance, Roush Coleman, which has been the biggest builder in Oklahoma, an 8-state builder, last February of last year, was acquired by Lennar, and they've been merging things together slowly. But what we just found out a couple of days ago is that the Roush Coleman pricing and product is going to disappear. If a phase has Roush Coleman, it'll be finished with Roush Coleman. Then everything else beyond that is Lennar, and they're giving discounts to move these. For instance, we have a brand new 3-bedroom home at $218,000, and it's discounted $14,300. They want to move these as quickly as possible. And both Lennar and D.R. Horton, which is also giving us discounts, both are buying these loans down, $40 to $60 million at a time, to buy the interest rates down so that with a closing cost allowance, we may be able to get you a 5% fixed interest rate 30 years. So discounts, fixed interest rates, and the fact that Oklahoma is really benefiting from these oil prices. Now, the problem is also that this makes sure that the Fed is probably not going to lower interest rates because they look at inflation and labor. And this is highly inflationary in terms of food, in terms of just sheer energy, as well as everything else in manufacturing that would be affected by this. So understand that. We also, let me add one more thing. This is prime season. We're in March. You're closing in April and May. You could not close at a better time. Most amount of tenants, least amount of vacancy, highest rent. So, you've got an energy producing state that's going to be making a ton of money. You've got discounted homes. You've got low interest rates that you don't have to worry about. Are they coming down because they're going up? And prime season. We have these things. We have a lot of homes for you in the Oklahoma City area that are these. And so let us know if you're interested. We'll be happy to correspond with you, have a Zoom meeting. I think it's absolutely the perfect time to buy.